we need a rate cut of 50 to 100 basis points. I think time is right.
Interest rates, I can tell you, will go down further even if the RBI doesn't cut the interest rate.
The time is ripe for even 100 basis point rate cut, says the Vice Chairman of the NITI AAYOG, ARVIND, PANAGARIYA. But HDFC Bank's Aditya Puri says banks can slash rates even without further cuts from the RBI.
A very well kept secret has been that the state of Tamil Nadu has a different act or an amended act in place since January 5, 2015.
PANAGARIYA reveals Tamil Nadu has amended the 2013 Land Act 8 months back, calls on states to tailor the act as per their needs, expects Maharashtra and Rajasthan to make changes next.
SEBI seeks more disclosures from India Inc. wants companies to reveal key material events such as acquisitions, amalgamations and even family agreements.
M&M sparks a price war in the compact SUV segment, launches the TUV 300 at a starting price of just under 7 lakh rupees.
Indigo cements its place as India's most profitable airline. Profits hit 1,300 crore rupees in FY15, a fourfold jump from FY14 and the highest ever for the company, ahead of its Dalal Street debut later this year.
China is way ahead, and I think its bureaucracy is much more efficient than India.
AirAsia's Tony Fernandez criticizes stringent rules in India to fly abroad, says China's bureaucracy is more efficient, calls the 5/20 rule nonsensical.
Competitors energize, competitors don't intimidate.
It was important for us to tell the consumer that this is a safe offer that you can have and don't miss, your yippee noodles in the market.
Well, also on the hour, a war awards between Nestle and ITC over instant noodles. The Maggi versus Yippee fight, another exclusive.
And state governments continue to make their pitch to attract investments. It's the second day of the Tamil Nadu Global Summit as companies pledge to pump in over 1 lakh crore rupees in the state. And Uttar Pradesh Chief Minister claims to have drawn 33,000 crore rupees from India Inc. with his Mumbai roadshow.
We are about to make some monster announcements across several of our product lines.
Basically building the foundations for the future. It's about the future of the TV, the future of the tablet, and the future of the iPhone.
The market is acting negatively toward is the pricing of the Apple devices.
They're moving basically from a hardware cycle where upgrades are lumpy and just pulling people on defined upgrade paths.
While on to pencil, what's new about the iPhone? Apple is facing a backlash, at least as far as social media is concerned, after it launched its new products last night. But it will be worth remembering that similar criticism followed the iPhone 5S launch, and that went into clock record sales, taking the company to new heights. Good evening. Thanks very much for joining us on India Business Hour. Nantara, are you going to be buying the iPhone, the new iPhone?
Well, considering I lost my iPhone 6, I'm certainly in the
you've gone
market.
over to the other side.
No, I don't like it. I don't like it. I'm in the market for a new iPhone 6s and therefore a new Raise as well.
I don't know about the Raise, but you're certainly the market for the new iPhone 6s. And we will have to tell you that the Apple stock today, of course, on opening bell has seen a recovery. So we will be tracking that story. But on to our markets and a quick check of the action on Dalal Street. It was a roller coaster ride on Dalal Street. The bulls arriving late and changed the landscape with just 15 minutes before before closing bell. So plenty of excitement towards the end of trade. The Nifty recovered about 150 points from the day's low to end with marginal losses. The Sensex also recovered from some deep cuts thanks to that late rally that we saw. The mid-caps managing to outshine the blue chips and ended the day with marginal gains. So as that graph shows you, across those three indices, we really saw some exciting times towards the close of trade. But the relief rally fizzled out across Asia. China's stock market closed about 1.5% lower today, ending a two-day rally. This after Premier Li warned that the country's economy was vulnerable to global shocks. But Premier Li also pointed out that he feels confident about a turnaround in the Chinese economy. At least that's what he told investors at the World Economic Forum Summer Davos. Now, investors' nerves were also rattled by news that manufacturers had cut prices at the fastest rate in 6 years in the month of August, hinting at a deflation. The story in the rest of Asia was no different. Asian shares outside South Korea were in the red as economic data out of the region's top two economies heightened concerns about growth. But what about Europe, Nantaran? Is the Brazilian factor impacting sentiment there at this point?
Not just Brazil, but even the bad news we got out of China and Japan having the impact on Europe. So if we bring out the frontline indices for you, you'll see that for yourself. But this is what happened overnight. Brazil was stripped of its investment-grade credit rating as the country's political and economic problems deepened. S&P has downgraded Brazil to BB+, making it the first of the BRIC economies to lose investment grade status since the financial crisis began. It's pretty much been called a junk status right now. Let's do a quick check of how the Brazilian markets have received that news. Stocks have in Brazil been seeing sharp cuts, and all of that also showing in Europe, like we were just talking about the frontline indices in Europe. Shireen, taking a cue from Asia as well as Europe, we saw some deep cuts over there as well.
Okay, so that was the market action, but across the Atlantic, a quick check on Wall Street. Stocks are trying to eke out some gains as we speak, and the Apple stock is clocking healthy gains after those slew of products that were launched last night. So as I said, it doesn't matter what social media has to say at this point in time about Apple and its new products. The stock, of course, seeing recovery today, 1.5% higher. Crude prices on the rise today. Brent crude trading at $47 a barrel. WTI NYMEX is also higher at $44 a mark. But let's head back home to our big exclusives tonight. A policymaker believes that the Reserve Bank of India should slash rates further, but a top banker says that industry, i.e. banks, have room to ease rates even without any help from the central bank. Let's start with the policymaker. I spoke with the Vice Chairman of the NITI AAYOG, ARVIND earlier today. He believes the Reserve Bank can cut rates by up to 100 basis points. In fact, he says that is the need of the hour. PANAGARIYA is also optimistic about India crossing the 8% plus GDP mark, as he expects the first quarter growth number to be revised upwards. Listen in.
I've said this before, those are not quite my words, that the RBI should be more aggressive. Those are your words. But in the substance, I have said this, that we need a rate cut of 50 to 100 basis points. I think time is right.
Do you believe that whether or not the Fed actually lifts off in September, which is the expectation, is actually still split on whether we will see the Fed move in September or perhaps push it now to December? Do you believe that that could weigh on the RBI governor's mind ahead of the credit policy?
Yeah. Well, my view has been that, look, the case for cutting the rate is so strong, at least, from what I understand, that even if the Fed actually raises the interest rate, in any case, it's going to be baby steps. It's not going to be a mega increase in interest rate by the Fed. But whatever the Fed does, I think we are ripe for, a rate cut of maybe, say, 50 basis points.
Do you believe that the target set out by both the budget as well as the economic survey of an 8.4% kind of growth number for this particular financial year is under threat, given what we've seen as far as the latest GDP print is concerned?
One, we still need to wait. These are preliminary figures for the GDP first quarter also. They may get revised upward. There is a possibility. And I would not write off the prospects for getting past 8% growth rate. We have had quarters when we have grown 10%, 9%. So
But the monsoon picture is looking bleak, which will obviously impact agriculture. We're not really seeing high-frequency data suggest any kind of big up move as far as sales are concerned. Corporate earnings continue to look muted at this point in time. What gives you the confidence that we're going to see such a sharp pickup in the second half to be able to get to that 8.5% number?
Yeah, I mean, there are 3 more quarters left, and as I said, the first quarter may itself actually turn out to be higher than what it is. So pickup required probably, maximally is 1% if we go by the current first quarter figures in one of the 3 quarters. So the pickup required is, is not huge when I spread it over the 3 quarters. Certainly the mood was certainly very positive at this meeting, but also we are seeing this in terms of investor sentiment. Investors, even foreign investors who are keeping out, are now beginning to actually return to India.
The Vice Chairman of the NITI AAYOG on his outlook as far as interest rates go. We're going to get back to that interview in just a bit, where PANAGARIYA reveals a secret when it comes to the Land Acquisition Act. But for now, let's shift focus to the other big exclusive interview of the day. HDFC Bank has been in the news recently for cutting base rates by as much as 35 basis points. This makes the bank's lending rate one of the lowest in the country. The bank's MD, Aditya Puri, told CNBC TV8's Latha Venkatesh that such a move was made possible due to the bank's shift towards marginal cost of funding as advised by the Reserve Bank.
If everybody moves to marginal cost, and if RBI helps as well and cut, you could look at between 50 and 75 basis points.
Before the 2015 year is out?
Before the fiscal
year is out. Okay. How much do you think this is helping volume? Are you already seeing it? Because if I were a customer buying a car or anything...
We are seeing improvements in volume.
Okay. Last year, I think the first quarter you all said 22% year-on-year growth in credit.
Yeah.
This year you will expect that it's going to be a lot better?
It should be better as the economy is picking up.
Okay. No, but you also have a price advantage. Won't that anyway mean that you will do better than last year?
Now, what if everybody reduces the rate by month end?
Okay. Okay. You were speaking about the economy.
Yeah.
What is your sense? Have things gotten a little worse in the current quarter versus the previous because of monsoons or for whatever reason?
I don't think so. I don't think so. You see, there are a lot of things that people are talking about which is not necessarily the reality that we face on the ground. The economy is on an uptick. So let's be very clear on that. And this inflator and deflator and all this is confusing everybody. But the fundamental is that the economy is on an uptick. People's expectations of that uptick vary, and consequently so do their observations. But we continue to hold that somewhere between 7.4 and 7.6 GDP will come this year. We're also seeing a lot of government expenditure come in this quarter. And even if you take the previous quarter estimates and you bring in government expenditure, any slowdown or any perception of that would probably be misplaced. Okay. So we think there will be an uptick in the GDP growth rate. It may not be to the level required. And let me preempt your next question. When will private investment come in? I think we have savvy businessmen, and if they see a continued uptick in the GDP, the investment will follow. Before the delta of the investment hits the GDP, in our own mind, it's somewhere between 12 to 18 months.
So that's an interesting point of view there from Aditya Puri, saying that even if the Reserve Bank were not to move on rates, whether it's the 29th of September or post that, bankers have enough room to actually bring rates lower down. And HDFC Bank, of course, has taken the lead with that aggressive cut in the base rate, and he expects other banks to follow suit. But let's get back to that interview that I did with ARVIND, the Vice Chairman of the NITI AAYOG. And this is interesting because he revealed that the state of Tamil Nadu has amended the 2013 Land Acquisition Act. Of course, at the state level, it has deviated from the central legislation. The amendment was made as far back as January this year, and the President has already given his assent. PANAGARIYA now expects states like Maharashtra and Rajasthan to follow Tamil Nadu's lead. He also spoke about labour reforms and how the states of Madhya Pradesh have followed the lead after Rajasthan, and perhaps Gujarat could follow suit, but Gujarat has seen some trouble as far as its labour laws or pushing its labour laws are concerned. Listen in to that conversation.
very well kept secret has been that the state of Tamil Nadu has a different act or an amended act in place since January 5, 2015. So it's been almost 7 to 8 months. Very few people knew about it. But Tamil Nadu has in fact amended the 2013 Act as it applies to their state. What they have done is they have introduced a new schedule within the legislation, and in that schedule they can list certain state legislations which then are exempt. Once those legislations get listed in this schedule called fifth schedule, those legislations become exempt from the 2013 Act.
So then you don't actually need to come back to the President, seek presidential assent or anything. You're saying Tamil Nadu has already deviated from the Central Act and made more exemptions than that are provided under the Central Act.
Correct. So that Act required presidential consent, which has been given. Now, for the future, Tamil Nadu does not have to come back to the central government because they can add to the list of acts that are listed in the fifth schedule, or they can subtract from it. Other states could follow the same strategy. They too will have to come to the central government for the presidential assent. But my own speculation is that once the assent has been given to Tamil Nadu, to one state, I don't think the central government is going to deny that same thing to the other states.
Have you sort of in the process of the conversation and the consultations that took place, are states like Maharashtra and Punjab now close to moving to seek presidential assent to deviate from the Central Act?
So certainly I have passed on that advice to the Maharashtra Chief Minister. And as far as I understand, he has even made a public statement that he was going to actually follow that route. But remember that first he has to pass it in the Maharashtra Assembly, and then after it has been passed by the Maharashtra Assembly, then it comes to the presidential consent. I've also suggested the same to the Chief Minister of Rajasthan.
Are you disappointed with the pace of change that we've seen specifically on labour reforms? I mean, yes, individual states and perhaps the state of Rajasthan have moved on that, but we haven't really seen much action as far as the centre is concerned.
No. So it's not just Rajasthan. After Rajasthan, Madhya Pradesh has followed suit. Actually, Madhya Pradesh has gone a little farther than Rajasthan did in the first go. I mean, Rajasthan made big jumps, but Madhya Pradesh took advantage of that, and it has gone a little farther. Gujarat actually is on the way also. They have made some very interesting changes, very much some of the changes that I'm now recommending also to the other states.
Could you articulate for us what would be the key
I will tell you, but those changes are still, the presidential assent is still required. But one of the important changes Gujarat made was that within the special economic zones and the industrial zones, etc., or manufacturing zones, what they have done is that they would permit a company of any size. Rajasthan limits it to 300 now. The Industrial Dispute Act original limit is 100, but Gujarat has said that in the special economic zones and the manufacturing zones, companies of any size would be allowed to lay off workers, provided they pay them 60 days of wage for each year worked.
The Tamil Nadu state government actually amended its land law 8 months back. You can catch that entire interview over the weekend. Moving on, disclosures. SEBI wants India Inc. to reveal more details on key material events such as acquisitions, amalgamations, and even family agreements. Venkatesh now joining us with that. Venkatesh, this is going to make life much simpler for minority shareholders and even analysts.
Well, this may mark a new era of transparency for listed companies. In the listing regulations that we issued last week, SEBI put up a long list of events or developments that companies must mandatorily disclose. Now, these include, and I've just picked some of the highlights from there, acquisitions. They include even agreements to acquire, as also any acquisition of even 5% or more must be disclosed. The sale or disposal of any unit or division or subsidiary of that listed entity must be disclosed. Any restriction on the transferability of securities also has to be disclosed. alteration of calls, rating revisions. Both of these are part of that disclosure list. Shareholder agreements, and these include joint venture agreements, even family settlement agreements. They all have to be disclosed, at least the relevant portions of a family settlement agreement relevant to that listed entity must be disclosed. Frauds or defaults by promoters or key managerial personnel, corporate debt restructuring, one-time settlements with a bank, all of these have to be mandatorily disclosed. Additionally, SEBI has listed events and developments that companies must consider disclosing based on the materiality of these events and developments. For instance, capacity additions, product launches, loan agreements, the effects of changes in the regulatory framework on that listed entity, litigation. All of this, SEBI has said, companies must devise a materiality policy on and then determine whether it needs to be disclosed or not.
Well, Menka, speaking of the disclosures, what kind of details will companies have to provide in these disclosures?
Well, that's right. In order to give companies guidance on how much detail needs to be disclosed and also to ensure that enough transparency is provided to shareholders, SEBI has now, in the last 24 hours, also prescribed how much detail companies need to provide in such disclosures. So, for instance, again, I'm only giving you highlights. When it comes to an acquisition or an amalgamation, the company has to, besides disclosing price or rationale or the regulatory clearances required, the company also has to inform shareholders whether the acquisition is a related party transaction, whether the promoter has any interest in the entity that's being acquired, and whether the transaction is being done at arm's length or not. When it comes to the sale of a unit or a business or a subsidiary, again, the company needs to provide details on that unit's contribution to revenue and net worth, and whether it's a related party transaction, as also whether it's being done at arm's length or not. When it comes to, let's say, a preferential issue, the names of all participating investors have to be disclosed. Detailed disclosures are also required in ADRs, GDRs, and FCCB issues. For instance, a company must disclose if it is defaulted on paying the FCCB coupon, and not just that, it must also disclose what corrective measures it is undertaking or intends to undertake. Any special right or interest attached to a debt security also has to be disclosed. As I mentioned earlier, any restriction on transferability of shares has to be disclosed. Also, companies have to provide the reasons for those restrictions as well as the details of the affected shares. When it comes to agreements, in the case of shareholder agreements or joint venture agreements or even family agreements, companies must now give names of the parties to the agreement, the purpose of the agreement, as well as affirmative rights that are being granted to different members or parties of that agreement, any relationship to the promoter that any other party may have. All of these details must be put out. Shareholders will also get details on frauds by key managerial personnel or the promoter, details on corporate debt restructuring or a one-time settlement with the bank. And SEBI has also provided guidance on when an event or development has occurred. This is a slightly narrower set of guidance. For instance, some events such as a rights issue will have to be disclosed at the time of the board approval. But here's where SEBI's made a bit of a miss. It's made no reference to when a company must disclose, let's say, an acquisition. So that could prove to be a sticky area still. That said, companies now have more clarity than before on what to disclose and how, and shareholders benefit from the transparency.
Right, thanks a lot, Venka. But, moving on to another story, M&M today launched the TUV 300 compact SUV at a starting price of 6.9 lakh rupees ex-showroom Pune. That's the base rate for the T4 variant. The SUV incidentally has three variants on offer, the T4, the T6, and the top spec T8, which will cost 9.12 lakh ex-showroom Pune. So in a sense, M&M starting a price war with other compact SUVs, be it the Duster or the S-Cross. Alexander Matthew was at the launch at M&M's Chakan plant. He caught up with the group executive director Pavan Goenka and asked him about the cost of developing that compact SUV, which will take on the likes of Ford EcoSport, Renault Duster, and the recently launched Hyundai Creta.
300 crores has gone into the engine and transmission, including the AMT transmission, and the remaining 900, about a third, has gone into engineering Engineering meaning the R&D cost, the prototype cost, the testing cost. So that leaves about 600 crores, which has gone into the capex for toolings, as well as what we have done in the plant. So that's the rough breakup of the 1,200 crore. In addition to that, of course, suppliers have invested, and our estimated supply investment is about 300 crores.
Okay. When can we see a petrol offering for Mahindra, and will the TUV have petrol offering in the near future?
Right now, our focus is on the first petrol offering coming from the S101 vehicle that will be launching before the end of this financial year. And we will have that product coming out when we launch it, both with a petrol and a diesel option. We are exporting petrol in the larger vehicles, but right now we don't see any demand for petrol vehicles in the larger segment in India, and therefore we don't intend to launch them.
So that's Pavan Goenka there. So will M&M's TUV 300 compact SUV make the cut and give the competition a run for its money? Bertrand D'Souza, the editor of Overdrive, joins us now with his analysis on where the vehicle scores and where it doesn't. Bert, give us your review.
I've just driven to home in Mumbai from Mahindra's plant in Chakan, where they just launched the latest baby, the sub-4 meter SUV TUV 300. Now, there's a lot of potential that this vehicle holds, wider and taller definitely than the EcoSport, though a little shorter in length. This isn't one of those flashy design themes that Mahindra is used to doing and what we've seen in previous generation SUVs, the Scorpio and the XUV. A fairly simple but very, very effective and intuitive dashboard as well. Quite pleasing interiors. As I said, lots of space. 7 people can be seated inside the TUV 300. Mahindra's rather worked on the M-Hawk engine, and that's a diesel, common rail turbocharged diesel engine. You get about 84 PS of max power and 230 Newton meters of max torque. And that torque delivery, well, it's quite well spread throughout the power band. So you get fantastic drivability in almost any gear. People aren't going to be complaining about this being a 3-cylinder engine. Yes, that's the big highlight over here. Now, this engine is mated to a 5-speed manual transmission, but Mahindra is also going to offer, or rather is also offering an AMT with this. We haven't driven the AMT yet, so I can't comment on what that feels like. But the 5-speed manual, well, that's a perfectly nice gearbox to use. Slick gear shift quality, very easy to drive, or very easy to use in urban conditions, again, like I said, or on the highway. It's got absolutely brilliant ride quality. Power for the segment, probably one of the benchmarks in this segment as well.
All right, Bert, appreciate you joining us with a review, and of course we'll get you the test drive on Overdrive, but that's the compact SUV from M&M, the TUV 300. Let's talk about Indigo Airlines now, and it continues to fly high. It's managed to consolidate its lead further by posting its highest ever profits in the year gone by, and this all goes well for the airline, which is all set to make its debut on Dalal Street later this year. Sindhu, who tracks the aviation sector, sent us this report earlier today.
Yes, it seems there is no stopping Indigo. So net profit for fiscal 15 stood at 1,304 crore. Remember, that's almost a fourfold jump from the previous fiscal's 317 crore. Revenue was close to about 14,400 crore versus 11,500 crore in FY14. So definitely a big jump. What we are picking up from sources is this has been a result of increased passenger numbers because Indigo added capacity. It managed to get better yields, which is revenue per passenger, and managed to contain costs. As for the DRHP that it filed, where there are figures for FY14 only, Indigo has always maintained that it has maintained its cost very tightly. In fact, it claims that it is the lowest cost operator in FY14 amongst all airlines. So keeping costs under control has been a big factor. For FY15, Indigo has reported a net margin of 9.4%, which is also an industry high. The airline says it sticks to a copybook LCC model, which means it does not offer frills like free airport lounges, complimentary meals, frequent flyer programs. It only has one set of aircraft, which is Airbus 320. It does not experiment with different kinds of fleet, and as I said, it keeps costs under tight control. All this helps it probably remain profitable far easier than other airlines. This is the 7th consecutive year when Indigo has shown a profit, but this is the highest profit ever declared so far. Obviously, this is going to be a fillip for the upcoming IPO. Back to you.
So Indigo is flying higher, and that's despite new competitors entering the fray. But let's talk about one of Indigo's rivals. AirAsia is not at all happy with the present Indian aviation policy. In a conversation with CNBC's Jeff Cutmore, Tony Fernandez, the CEO of AirAsia, says the 520 rule, coupled with the various bureaucratic hurdles, makes it a tough place to do business and grow.
China's way ahead, and I think its bureaucracy is much more efficient than India. In India we still have a regulatory policy that, to me, is counter to jobs, counter to growth. Airlines such as us and many other airlines want to invest more to do international flights, bring more tourists to India. Tourism could be a huge plus, but we're constrained by a very old law where airlines can't fly international unless they have 20 aircraft and are flying for 5 years, which is nonsensical to me, contrary to market reform. So I think Mr. Modi still has to grapple with many of these issues.
Well, that's Tony Fernandez of AirAsia reiterating what he's told CNBC in interviews to us several times over, that 5/20 is nonsensical. It ought to go, but it doesn't look like it's going anytime soon. Even if it does go, a much more complex or complicated mechanism is going to be put in place where airlines may have to chalk up domestic flying credits in order to fly abroad. But we will have to wrap up this edition of India Business Hour. Good night.